You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Well, good afternoon. Welcome back. Today's Friday, the 13th. Day of June 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is our live trading room. So to get into that one, you either have to be a member or taking your 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com, and at the top of the page there's a big purple button. You can't miss it. Click it, fill out the form, hit submit, and if you filled out the form correctly, we'll get your indicators up and indicating today. Your trial will officially start on Monday, but you'll have the whole weekend to kind of get familiar with the indicators and you'll be ready to go. Actually, we start Sunday night at 6 p.m. Eastern. So if you're on the trial, you'll have access to the stuff we do on Sunday night as well. Just got to make sure you get Telegram installed, because that's where all the alerts are published for our members and trial members. Now, there's no credit card required for the trial. And there's a reason. We want you focused on what's being taught. We want you learning, not worrying about whatever nominal fee you might have paid to take the trial. Because we want you to be able to make a well-informed, intelligent decision at the end of your trial as to whether or not trading is right for you. Now, when the live training room ends and by the way, when you take the trial, you're not just getting the live training room. What we do for 5 consecutive trading days, we treat you just like you were already a passport holder. We give you access to everything. Okay? Everything you see on the screen, it's yours for 5 consecutive trading days. No credit card required. Now, when the training room ends each morning at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, and this time you're going to scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, maybe you're on vacation this time of year, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. The good news, you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That is the Christian Financial Radio Network since 2005. You don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, you can really get to know who we are. You can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but it's a great resource to have at your fingertips, and it lets you know we've been around a minute or two. And again, by just jumping around, skipping around, you can see how we evolved over the years. youtube.com/CFRN. This is our schedule for each afternoon broadcast. Michael will be joining us at the top of the hour to give us a recap of what happened this morning in the live training room. Then he'll do some live trading on the TradingView platform for about 30 minutes. And then we'll wrap it all up with our good word for the day. But this is where we start each and every day with our daily devotional. And the topic that we're on right now, it's day 3 of 3. God, are you listening? Today's scripture, Esther 4, verses 15 through 16. You don't hear a lot of sermons preached out of Esther, do you? Now I'm going to share this from the Message translation. Esther sent back her answer to Mordecai. Go and get all the Jews living in Susa together. Fast for me. Don't eat or drink for 3 days, either day or night. I and my maids will fast with you. If you will do this, I'll go to the king even though it's forbidden. If I die, I die. She's pretty committed. Again, that was Esther 4. So, the topic of the devotional for the last 3 days, God, are you listening? Not only is he listening, God answers. The book of Esther is a fascinating read. It makes no reference of God by name, but what is so telling about God's sovereignty is that even when he is not mentioned, revealed, or directly encountered, he intervenes in what could have been a mass murder for Esther and the Jews. After they completed the fast, Esther prepares to share details of the plan that would threaten the welfare of her people with King Ahasuerus, her husband. However, before she exposed the plan, his response to her approaching him was, "What is your wish, Queen Esther? It shall be granted to you. And what is your request? Even to the half of my kingdom, it shall be fulfilled." That's Esther 7:2. How often do we receive a yes before we even ask the question? Wouldn't you agree that someone had to consider the circumstances that were developing and what factors contributed to Esther's courage to doing a secret 3-day fast, a practice that was prohibited by the king's court. Where did she get the confidence to fast and approach the king with such a request? Esther's story serves as a powerful reminder of God's sovereignty whenever we need inspiration. If he can orchestrate such a blessing for his people then, without being mentioned, then consider how God's people are being blessed today. When we are steadfast in our commitment to be in alignment with his will, there's nothing the Holy Spirit will hold back from us. Now, reflect on a time when God answered your prayer. How did he respond? Was his response what you expected? If his response was not what you wanted, take a moment and journal about it. But as you do, be honest with yourself and answer the question: what can be hindering you from receiving the answers you seek? Let's pray. Heavenly Father, thank you for answering our prayers. No matter where we are, you're sovereign and know all things. You watch over us even when we disappoint you with our actions. We pray for boldness to step out of our comfort zone, to become more like you every day. Thank you for speaking, listening, and answering us. And thank you for giving us the courage to get out of our own way and to serve you like we should every day. Our times are in your hands. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Friday. Everybody's been working for the weekend, and now it's here. I just found out today we have a holiday next Thursday. I guess it's Juneteenth, so we won't be here. In fact, it's been so many years since I had a vacation. I'll be off Thursday because the markets are closed, but I may take Friday off. And then, of course, we're off Saturday. But I'll get back early Sunday afternoon so that I can get the weekly trading zones done and get all the alerts out in a timely manner to the best of my ability, God willing. So, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. The Dow is down 390 points, almost 1%. NASDAQ is down 74. S&P 500 is down 19. And the Russell 2000 is down 18. Now, if you're a stock trader, that's going to give you a frowny face. But if you're a futures trader, we don't care if all four of the major indices are red or green. Because with futures, you can be long, short, long again, all in the same hour if that's what the chart in front of you tells you to do. And when they're all the same color, red or green, that's when you get better follow through on your trades. So keep that in mind. Yesterday we had the dreaded mixed markets, but today's a different day. Now, crude oil is up $3.80, trading 71.84 last. That's a gain of 5.5%. But last night, when the news broke about Israel and Iran, crude ran up $8, over $8. That's over $8,000 per contract traded. Of course, when you get a big move like that, you expect a 50% retracement or so. And I'll show you that as we go through the charts in a bit. Gold is up $43.40, trading 34.4580 last. That's a gain of a little over 1.25%. Silver down 4 cents, trading 36.28 last. In the Asian markets at the close, Nikkei down 338 points, almost 1%. Shanghai down 25. The Hang Seng down 142. And in the European markets at the close, FTSE down 34. The DAX down 255. That's a little over 1% for the DAX. And the CAC down 80. For the CAC, that's a drop of a little over 1%. So we had a red day in Asia, a red day for the UK, and it's a big red Radio Friday here in the US of A. So let's get to the news. I'm sure there's no one within the sound of my voice that doesn't know what happened last night. I learned a few things. I probably, if I have time, I'll go into them today. But anyway, Israel claimed responsibility for launching waves of airstrikes overnight against dozens of targets across Iran. Details of the attack, which Israel called preemptive. Now, they call it preemptive because Iran, the atomic watchdog last week, told them, you better stop enriching uranium. And so, how did Iran respond? They brought another enrichment facility online. They were literally days away from a nuclear-grade weapon. That's the reason for the preemptive strike. Iran said top military officials, including the Islamic Revolutionary Guard Corps leader, General Salami, were killed, along with nuclear scientists. Israel suggested the operation was not over. The attack came after Iran announced a new nuclear enrichment site yesterday, following a censure from the UN's nuclear watchdog agency. A report last week found Iran conducted secret enrichment activities at 3 facilities and has amassed enough uranium at near weapons grade levels to make 9 nuclear bombs. An Israeli official yesterday alleged Iran was working to assemble a nuclear weapon. As you know, earlier in the week, President Trump evacuated most of the American personnel from the Middle East in anticipation of what was about to happen. In fact, Trump said today he knew days ago this was going to happen. Following Israel's strike, Secretary of State Marco Rubio said the U.S. was not involved in Israel's attack and warned Iran not to strike U.S. interests or personnel. And I believe Rubio and Trump mean business. Now, we talked already yesterday about this tragedy in India. A London-bound Air India flight crashed less than a minute after takeoff from India's western state of Gujarat. The airplane carried 242 people, including 169 Indian nationals, 53 British, 1 Canadian, and 7 Portuguese. Initial reports suggested no survivors, but authorities later confirmed 1 passenger, 40-year-old British citizen Vishwas Kumar Ramesh, seated in seat 11A, was found alive, with minor impact injuries to his face, chest, and feet. The Boeing 787 Dreamliner crashed into a densely populated residential area, striking a medical college hostel and killing at least 5 people on the ground. Our hearts and prayers are with all the people, the families. What a tragedy. The aircraft reached an altitude of about 625 feet before rapidly losing lift. The pilots issued a Mayday distress call, signaling a critical emergency, but no further communication was received. The cause of the crash remains under investigation. Now, I'm going to think about this. Since the beginning of the year, we've had planes dropping out of the sky like we've never seen before. I know we got outdated equipment and all kinds of things, but something else is afoot. Is it hackers? I don't know. But if it is, and if they can drop these planes out of the air at will, how long before they point their hacking towards Air Force One, or who knows? You see, unfortunately, Biden let an awful lot of people unvetted into our country. So how many sleeper cells are there right now? That's the problem. We have no clue. The accident is among the deadliest in India's aviation history, along with major incidents such as the 1996 Charkhi-Dadri collision and the 2010 Mangalore crash. The Boeing 787 Dreamliner had not previously been involved in a fatal crash. So this is the 787B, no, 787-8. Okay. And this morning, although it didn't really make the news, I forget where it was, somewhere here in the U.S., a plane was trying to take off, and it rolled off the runway. Now, if that plane had gotten airborne, well, we'd have had another major tragedy on our hands. So, tomorrow's a big day. Washington, D.C. will hold its largest military parade in over 3 decades to commemorate the U.S. Army's 250th anniversary. The event, expected to cost $25 to $45 million, also coincides with Flag Day and the 79th birthday of President Donald Trump, who is expected to give an address. Festivities begin on the National Mall with a morning fitness competition and conclude with a parachute jump, concert, and fireworks. The roughly mile-long 3-hour parade, starting at 6:30 p.m. Eastern, is expected to draw about 200,000 spectators and feature more than 6,000 soldiers, dozens of aircraft, more than 100 vehicles, several horses, 2 mules, and 1 cavalry dog traveling from Texas. A similar event Trump proposed in 2018 was canceled due to expected high expenses. The last military parade honored the end of the Gulf War in 1991, with similar events historically reserved for war victories and presidential inaugurations. Meanwhile, over 1,800 demonstrators are planned nationwide to counter the parade and protest the administration's policies. Man, I listened to this left-leaning podcast this morning. Unbelievable. Now, you might say, well, why would you listen to such a thing? Well, they say keep your friends close and your enemies closer, so you know what they're up to and what they're thinking and what they're saying. All this stuff you've been seeing on TV, they say it was made up. It was AI generated. They say it's not really happening. Well, go talk to one of those small business owners that lost their business. Go talk to the guy whose car got blown up. Go talk to the people who couldn't get to their doctor's appointments or get home to their families or get to their jobs because these knuckleheads had blockaded Highway 101. If you've ever been to California, you know that's a pretty major artery. Anyway, I don't want to go on a tirade here, so I won't. U.S. stocks fell today as Israel's attack on Iran shook global markets, leading oil prices to spike after Iran called the strike a declaration of war. Yeah, that's exactly what it was. You were warned and warned and warned again. See, Biden took the appeasement approach. Well, if we'll be nice to them and take away their sanctions and unfreeze their bank accounts and even give them a little extra cash. That was Obama's deal. Remember, he sent those pallets of cash and all kinds of different currencies under the cover of darkness, hoping no one would ever find out. That's appeasement. Guess what? When you're dealing with a bully like Iran, it's like the guy on the playground that takes your lunch money. As long as you keep giving him your lunch money every day, guess what? He's going to keep taking your lunch money. But pretty soon, you're going to get so hungry and fed up that you're not going to give him your lunch money. And yeah, maybe he'll beat you up, but you'll go home and you'll do some push-ups. You'll go in the garage, you'll lift some weights, and pretty soon, when he tries to take your lunch money, you're going to lay him out. Boom. Sorry if that sounds harsh. Go read the Old Testament. I realize we're under a different covenant now with the New Testament, but things got pretty brutal back then. We've already talked about crude, and I'm going to show you the charts here in a few minutes, so we can skip that. Consumers are starting to feel better about the trajectory of the U.S. economy as President Trump has dialed back some of his most aggressive stances on tariffs. That's called negotiations. And Americans come to terms with the economic reality that the tariffs are here to stay. This morning, we got the University of Michigan Consumer Sentiment. And it showed that sentiment increased for the first time since December of 2024, with the index rising to a reading of 60.5, above the 52.2 seen last month and the 53.6 expected by economists. Now, talk about a miss. Economists said 53.6, that's what they were expecting today, and we got 60.5. That's huge. That's the American people speaking. Consumers appear to have settled somewhat from the shock of the extremely high tariffs announced in April and the policy volatility seen in the weeks that followed. You know, everybody running around, the sky is falling, it's the end of the world. No, it's not. Now, this Iran thing might be the end of the world, I don't know. We pray it isn't. President Trump has been able to argue that his economic policies aren't stoking inflation and point to inflation prints cooled by falling energy prices as evidence. But rapid-fire developments in the Middle East could put that case in jeopardy. Last night's airstrikes from Israel across Iran immediately shook up oil markets, with fears that a protracted war could lead to higher oil prices and inflation this summer. See, they're always worried about, they can't accept the reality of what's going on right now. They just, because it defeats their narrative that they've been pushing for so long, the legacy media, they just aren't willing to accept the fact that what Trump's doing is actually working. Now, while Most stocks fell today. Defense stocks climbed early today after this business last night. I hate to say this, but historically, war is good for the markets. Just go back and look at history because it cranks up the war machine. You know, all of the uh, munitions factories and the people that make the uniforms for the soldiers and all of that stuff. Sadly, it creates a lot of jobs. And I don't know why I can't get rid of this frog in my throat. Maybe I should quit eating frogs. Lockheed Martin gained 3% early today, while shares of Northrop Grumman and RTX rose closer to 2%. Well, right now, LMT is up almost 4%, NOC is up almost 4%, RTX is up over 3%, and PLTR is up 3%. Now, the three companies I mentioned, Lockheed, Northrop, and RTX, supply weapons to Israel through their contracts with the U.S. government. Nobody wants war. I'm just saying, if you look back at history, war has always sent the markets higher. Last night, they fell, and they're falling today just out of the shock and awe of the whole thing. But already the markets are starting to recover, and you'll see that you'll see that clearly when we go to the charts. President Trump and his allies are pursuing an alternative strategy to defend against mounting court orders blocking his policies. Raise the financial stakes for those suing the administration. Republicans want to force people suing the U.S. to post financial guarantees to cover the government's costs if they win a temporary halt to Trump's policies, but ultimately lose the case. A measure in the House's big, beautiful tax and spending bill would condition a judge's power to hold U.S. officials in contempt for violating their orders to the payment of that security. In other words, you want to play, you got to pay. A new proposed version of the bill announced by Senate Republicans yesterday removes the contempt language, but would broadly restrict judges' discretion to decide how much of a security payment to order from challengers who win initial pauses to Trump's policies or to waive it altogether. I'm telling you, make them pay. When you get your hand in a man's pocket, you get his attention. Oh, and while I don't have an official news article about it, obviously, because the media doesn't, Did you see Senator Padilla yesterday? You're probably going, who's Senator Padilla? He's a senator from California trying to make a name for himself. He wants to be in every news cycle for the next couple of weeks. Without identifying himself in any way, he stormed into a press conference being held by Secretary Kristi Noem. And he was so over the top and out of line that Noem's security detail just started pushing him back. And then he started screaming, I'm a U.S. Senator. It's too late at that point. They pushed him into the hallway. They put him on the ground. They handcuffed him. And then somebody in the hallway goes, hey, you really shouldn't, you can't record this. So at that point, they turned the cameras off. But Padilla got exactly what he wanted. Now he'll be the poster child for Trump being a Nazi or a king or whatever. The guy asked for it. He got what he wanted. And yeah, they're going to try to use that against us. But I think the American people are smart enough to see through that very thin smokescreen. You'd be glad to know that's it for the national news. Let's go to the local news. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Over the last 358 weeks, we have now issued over 19,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 6:30 a.m. Eastern. She'll, of course, update it and finalize it for the week this afternoon, and it will be published in the appropriate places. But at the time she did the recap this morning, since the markets opened this past Sunday night at 6 p.m. Eastern, we had issued a total of 72 alerts. I've issued some additional ones this morning. At the time she did the recap, we were still waiting on the outcome of 7. So that gave us 65 actionable alerts, of which 6 or 9% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders. I had someone tell me one time they were on the trial and they booked a one-on-one mentoring session with me. And he goes, "Man, I've been looking at those logic alerts. I've been looking at the record." He said, "Wouldn't it be awesome if you could actually put those out before they happened?" And I didn't want to laugh at some. I said, "Well, they're called alerts because they do come out before they actually happen." He says, "What?" I go, "Yeah, in most cases, hours, sometimes even a day or two before they actually trigger." He goes, "No way." I said, "Way." He's now a passport holder. But anyway, can you imagine bragging about, and I'm not bragging, I'm just showing, it's just the facts. This is what we've done over 358 weeks. 19,900 plus individual alerts. We are so close to that 20,000 round number. Guessing we will hit it next week. Now, every logic alert has an entry price, an initial target, additional targets in most cases, and a final trade to target. The initial target is just designed to help you get your goal for the day. Of course, you can trade them. I can't stop you. Nor do I want to, really. But what I want you to do is use them for the reason I created them, to help you learn how to read the chart. When we go through the charts today, each individual market, okay, you'll see how I read the chart. Now, there's nothing magic. Nobody taught me how to read the charts the way that I read them, because there was nobody around to teach me. So I had to learn the hard way. The good news is you don't. If you'll use the logic alerts, not just to trade, but to also figure out why my entry was where it was, why I put the initial target where I did, the additional targets, pretty soon you'll be fluent in the language of the charts. Whatever career you pursue in life, you got to be able to read the textbooks or the law reviews or the whatever goes along with that profession, right? But if you want to become a trader, you got to be able to read the charts. And the charts don't have any words or sentences or paragraphs or punctuation. It's a completely different language. And with a little time and a little help from a friend, me and Michael, you too can become fluent in chart speak. Now, 358 weeks, that's a long time, but years before Logic 247, we had our original alert service the concierge trade alerts. And they're different. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the CTAs, they don't come out around the clock. They're published as a static report most days, 5 minutes before the market opens. We all know today's the Friday session, but the Friday session actually began for us last night at 6 p.m. Eastern. That's when the Globex markets open, Sunday through Thursday. So what this means is all of our traders and all of our trial members had all of these targets 5 minutes before the market even opened. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now, as we go through the individual charts, just remember when you see these targets, these lines on the chart that have these numbers, just remember our people had them 5 minutes ahead of the open, not after the fact. So we shall now go to our first chart, the bellwether, the S&P 500. Now, last night during the workshop, or as we were getting ready to open the workshop, this hadn't happened. But I drew this in. We've been talking about it now for months. Major potential resistance up here at the previous bearish cross. That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Okay. The same is true of a bullish cross. If the markets were to sell off and come down, we would expect major support right here, at least the first time down. Okay. So the green line you see, it's called the BBC. It stands for bull bear cross. Price always reverts to the mean. I don't care what methodology or strategy you're using, price always reverts to the mean. In our case, the mean is green and we call it the BBC. It stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. But here's the really cool part. As you can see, once you get a leg, you get a retracement. The pullback to the BBC holds more often than it doesn't. It held here. It held here. Then we got this big leg, and then it held here. And then this leg here. This told us that the downtrend might be over. And on this day when we closed above the BBC, right at the 50% reverse fib, look what happened. Now, whether you're pulling up from below or pulling down to the BBC from above, the pullback holds, and the pullback holds, and the pullback holds. Now last night, when I drew this in, just as we were beginning the workshop, right before, we just had a little red candle sitting here. But then that news came out about Israel and Iran, and look where price ran, right to the BBC, which I had outlined as potential major support and put a little error there. Price came right down to it like a heat-seeking missile. But cooler heads have prevailed, and now look where price is. We've erased most of the sell-off. Huh. Now, one more thing. Whether you trade stocks, futures, crypto, Forex, or ETFs, I encourage you to spend 2 minutes with the daily chart of whatever you're going to trade on your smaller time frames. Spend 2 minutes with the daily chart first. Here's why. Institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So by spending 2 minutes with the daily chart, you're able to get a free look over the shoulder of the deep pockets that move price. You're also able to identify major areas of resistance, like the high of June 11th, which you won't see on your smaller range chart. Nor would you have known last night where the daily BBC is. And the pullback to the BBC holds more often than not. What a beautiful example. I challenge you to try it for 1 month. 2 minutes with the daily chart, identifying major areas of support and resistance, seeing what the deep pockets are doing. Obviously last night everybody was selling, but now not so much. Okay. Now we don't know how the session will close today. Heading into a weekend, some of the institutional traders may choose to unwind some of their positions or not. Remember, sadly, war is good for the markets. All right. All of the alerts, both the Logic 247 and the Concierge Trade alerts, are created on the 30-minute chart. There's nothing magic about 30 minutes. It's the time frame I chose many years ago. And they say if it's not broke, leave it alone. The vertical line here separates today, Friday, which began last night at 6 p.m. Eastern, right there. This is Thursday, back over here is Wednesday. These horizontal lines are our weekly trading zones, which we've now published every week for our members for almost, next month we'll make 15 and a half years. When price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a weekly zone, we expect resistance until proven otherwise. And when price drops, even off big news like last night, look where the market found support. Now these are the zones that were published this past Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. Now, one of three things happens when price encounters a weekly zone. 70% of the time it's consolidation, like this, like this. 20% of the time rejection, and about 10% of the time the slice. That's when a 30-minute candle slices through a weekly zone like it's not even there. Now, this was an unusual night last night, but what typically happens is when you have a candle slice through a zone like this and it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. But last night everybody was dumping everything. Okay. Now keep in mind that US stock traders, they didn't have a chance to address the market until this morning. But Asia, they were trading stocks all night. European opens at 3 a.m. That's when they start trading basically the same stocks we trade. But US stock traders, they had to wait till 9:30 this morning to take action. And look what's happened. After the massive sell-off, look how far we are back up. Now, what did I tell you this was? Red line gets below the green line, bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Now, we've poked through it twice, but we've not been able to close above it. Doesn't mean we won't, okay, because we're pulling back into support at the step line and blue and climbing and the BBC. In fact, we have what I call the perfect stack. Step line on the left, then blue and climbing, and then the BBC. Now, if the step line crosses to the right side of blue and climbing, then we're going to expect a retracement back to the BBC. And that very well may be what we get. This morning before the market opened, I posted a bunch of charts in the discussion group. And I said, wouldn't it be wild if when the market opens today, price would pull back to the BBC and then we take off like a rocket? And it happened, I think, on every market I put a chart up on. Now, that's not because I have crystal balls or any, supernatural ability. I just know how to read the chart. And you can learn too. This first move up, we got resistance at the underside of the short target. Pretty common. That sent us back to the BBC. The pullback held again. And it sent us all the way up to this area where we would expect resistance until proven otherwise. Okay. Now, we would have to get above this weekly trading zone before we'd even start thinking about trading to the long target. Will that happen today? I don't know. Again, we're heading into the weekend, and I just don't know if these institutional traders want to carry home too many long positions. Because this thing over the weekend, I mean, there's going to be all these protests tomorrow because of the parade. These people who live in America enjoy the luxury of being an American, but hate America. Or mostly they hate Trump. He seems like a pretty nice guy to me. But God bless America, we're all entitled to our own opinion. So, be careful. Sometimes it's tempting to go down and watch these protests. But you get too close and you're liable to get hit in the head with a chunk of concrete. Oh, and on that podcast today, the left-leaning one, they said that whole business about there being ads in the Craigslist in Los Angeles to hire these protesters, they say that's not true. Well, as soon as that was leaked, of course, they disappeared from the Craigslist in LA. But here in Phoenix, and I posted this in Telegram, they're called community organizers. $40 an hour to organize the community. Oh, and the guy that was handing out those face shields, the bionic shields, now that's expensive stuff. And some street protester has the money to go and buy in bulk all this expensive equipment and then just pass it out. They caught him. They arrested him. And if he's facing 20 years, he just might spill the beans on who gave him that money to buy that equipment to hand out. And when that happens, maybe we get to the head of the snake. Like with anything, you just got to follow the money, right? Okay, the Dow. Now the Dow has been the least one to recover today. This was a sell-off last night. This was the opening candle, okay? This one right here. And then the news came and we went down, down, down. But now look at this step line, okay? See how it's running parallel to red and falling? what happens right here? The step line crosses to the right side of red and falling. And what do we expect when that happens? A retracement to the BBC. So we consolidated for hours between the BBC resistance and the zone support once we get on the north side of it. Finally, buyers managed to push us higher. And I want you to take a look. This high, basically we kind of got a double top there. Lines right up with these lows over here. That, my friend, is market structure. So now price has come back down to the BBC, but look at red and falling, it's turned to blue and climbing. So my thoughts are we're going to see a move higher on the Dow. Because it's Friday, maybe not so much, but you got a big, beautiful window of opportunity here. 645. Let's call it 650 so I can do the math. Let's call it 650 to 700. That's 50 points. It's $250 per contract traded. You only need 20 points to get your goal for the day. Now, what if this attempted move higher fails? We have an app for that. And there it is. Oh, from 42,390 down to 300. That's a 90-point window of opportunity. That's $450 per contract traded. Now, by the time we have this broadcast on Monday, I'm pretty confident one of these two windows will have filled. Okay, Michael has arrived, so I'm going to pause here on the Russell. But don't worry, when Michael's done giving us a recap of what happened in the live training room and doing some live trading on the TradingView platform, I'm going to come back. I'm going to finish the rest of the markets in detail and wrap it up with our good word for the day.
Excellent.
And Michael, let me get your
Here we
pin
go.
centered here. Okay, you're ready.
All right, and let me click on this to make sure it's going to the right place. Let me refresh this page. There.
Everything looks good.
Excellent. Here we go. Good afternoon, everyone. Today is Friday, the 13th day of June, 2025. All right, so if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for that trial. Click on the purple button, and when you do, you are going to be brought to this registration page, which is for next week. Note there are only 4 days next week. Fill it out. All we ask for is your name, your email, your phone number down here at the bottom. Make sure you give us your TradingView login ID. You give us that TradingView login ID, hit the register button. Once you hit that, we will know that you signed up, and we'll get your indicators indicating for you as quickly as we possibly can. All right. All right. Results. We had actually had our best day of the week this week. Even though we stopped out a few times, particularly on the Russell. We stopped out. We traded 4 times on the Russell, and we stopped out 4 times on the Russell. How many times does that happen to people? Anyway, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today on the NQ, we're up 239 ticks. On the Russell, we're minus 60. On the gold, plus 29, and on the ES, plus 6. So on the day, we ended up with $1,260 with one contract. Today it took 4 minutes, and once again, it took one trade to get to the goal for the day. At that point, we're up $1,000, 10 contracts on, and it took a total of 29 trades. So on the month now, we're up $6,880. That's over 8 business days, averaging $860 per contract per 2-hour business day. On the year, we're up $147,350 over 99 business days, averaging $1,488 per contract per 2-hour business day. Now, the 24/20 blueprint, because we keep getting ones in here, and these are very small numbers, this hourly number is going to keep going up, up, up. All right. The best that we could do is, well, there are there's usually about 20 business days in a month. So if we had 20 trades for the total month, and the minimum, if we had 20 days and 20 trades, the minimum would be $20,000. And the amount of time, well, that would vary. But if we're doing it on the very first trade, usually it's going to be in under 5 minutes. So if you think about that, let's just do that. Let's do the math on that. Oops, hang on. I don't have a calculator handy. Hang on. That's because I had to reboot a little while ago. Let's bring up my handy dandy calculator. So if we had, say, 20 days, $1,000 each, that'd be $20,000 divided by 20 minutes. So 20 minutes is 0.33 of an hour, right? It's a third of an hour. We would be averaging $6,060 per day. That's pretty good stuff if you can get it. That's averaging 3 minutes a day. You average 3 minutes a day and one trade a day. Be $6,000 an hour. We're not too far away from that right now. Anyway, just playing with numbers. You guys all know I'm a numbers geek. So following the 24/20 blueprint, if you were to quit trading, when you get your goal for the day and add one contract per month, so far this year you would have only had to work 12.2 hours, and you would have earned $53,442. You'd be on your sixth contract right now. You'd be up $53,442, averaging $4,380 per hour. Right. All right. Now, let's get into the actual trades. Right. The actual trades are in here. On gold, we'll start with this. On gold. Okay. Go all the way back to the beginning. All the way back to the beginning. Here we go. All right. So, what am I telling you? Okay, I'm here, right here on gold. This is where we got the gold today on the very first trade. Again, it was on gold. We got 10 ticks on the very first trade. Then we picked up 7 ticks on the next one to get us to 17. Then we had a break even, and then we stopped out, went down to 2. Then we had an aggressive trade there. We went to 18, so we must have gotten 16 ticks on that. And then we had an aggressive trade there, went to 20, so we only got 2 ticks on that. And then we had a regular conservative trade there, went to 23. And we had our final trade here with 6 ticks. It got us up to 29. Okay. Let's see, the rest of the session, this didn't pull back deep enough right here to take a trade right in here. It gave you a trade setup, but you could have taken it if you wanted to. It wasn't a great one. If you took the follow-up one over here, that would have been a break even. This probably would have been a break even. So you probably would have had a couple of break even trades in there, maybe 3 in a row. None of those pulled back to a really good spot based on this leg length. But then once it got choppy in here, then you could have been aggressive. You could have started to switch to aggressive mode. And every time it went into the oversold, you wouldn't have known it was choppy until it did this. So over here, when it went into the oversold, you could have bought the open of the next bar. Here, when it went into the oversold, you could have bought the open of the next bar. And here, when it went into the oversold again, you could have bought the open of the next bar. Now, this bar went 9 ticks into profit before it came back down. So you would have had a chance to take some profit on that before it flipped around and went in the other direction. Now, once it did go in the other direction, this was your leg length. From here, it was actually all the way down to here to begin with. So your midpoint would be there. You wouldn't have had a trade. Then your midpoint would be somewhere in here. This was the one we would have taken the trade off of. So you would have had kind of an opportunity to trade there. It would have gone like this. Okay, it would have gone like that. So you would have had an opportunity right in here to actually take the trade right in here. Okay, and that worked out a little bit. It wouldn't have stopped you out, but it probably would have gotten you break even. The next opportunity was in here. You would have drawn this. That would have been 100% retracement. If you jumped in right there at the 100% retracement, you had a chance to take some profit in it. If you waited for the down close, you would have stopped out for sure. That was gold. we ended up with plus 29 on gold today. We actually traded the Russell, not the Russell, the ES more than anything today, I think. But we'll go to the Russell. We had 4 trades on the Russell and every one stopped out. There, stop out. That was 100% retracement, not the best trade. This right here was, it was, I don't know what I was looking at on that one. I really don't know why I took that trade. I don't know. It's, maybe I was looking at this right here. But either way, I stopped out minus 15, minus 30. This one, I could see the retracement to right there. I think I had drawn this in right here, but I think what I was looking at was a pullback to right here. I was looking for the up close right there to pull back to right here, and that stopped me out. So minus 30, then minus 45, and all the way over here to minus 60. And that was it. So let me just take a better look at what happened in there and see if I missed a bunch of things, because I don't want to end up with minus 60. Yes, it looks like I did miss some things here right at the beginning. When it started moving, you would have had this first leg length would have been from here to here. So from here up to here, we had a trade right there that I missed. Then the next one would have been from here all the way over to here. This isn't near deep enough. This is about as deep as it needed to be, but you would have had a new leg length to work with on that. It would have been right there. Not anything you would have wanted to trade. Then once it started moving again, you would have had from here all the way over to here. So that would not have been anything you wanted to trade in there either. It would have been right down in here. That would have stopped you. Then it flipped around right here. And the first opportunity, once it flipped around, you would have been looking at this right here, okay? You'd have been going from there down to there. Nothing good in there. Then you'd have been going from here down to there. So you could have shorted down close here. I wouldn't have wanted to do that. Too close to the swing low. Then you could have gone from here to here. So right in here. Again, the same problem we had with the last one. Then you could have gone from here down to here, and people would have gone all the way over to here. All the way over to there. Really, not anything good worth trading in there. Then finally, where you go from here to there, from here to there, you had this. That finally happened in here. But once that happened, then you came from here down to here. So you had a good place right there to trade. All right, now this is all in the first half an hour. This is all in the first half an hour. I know it looks like a lot to think about and to do. But you had a good opportunity there, I'm just going through to see, if there were opportunities that I really missed in all my stop outs. It looks like there were some there in that first half an hour. And then I stopped out like 4 times, and then I wasn't paying attention to it all that much after that. But anyway, let me bring this up and see if anybody's asked me any questions. Nobody's asked me any questions yet today. Let me back this up here. Jerry L. I think we need to talk. All right, so this is the ES. You can see I stopped out some here on the ES. On the ES, the high of the day we were at was 20 ticks, and we ended up with 6. So let's see how we did that. Okay, our first trade here on the ES, we picked up 8 ticks on the first one, then 8 more ticks on the second one, then break even, another break even, then 4 ticks to get us up to 20 on that one, and then we stopped out down to 10, break even, another stop out, back down to 0. Then we had a +2 and a +4. That got us to 6, and that's where we ended it. Now, during the break, from here to here is what you're looking at. So the pullback in the midpoint would be right here somewhere, right? Just looking at it, you can see that that's roughly where you want to see price go. On this next one, you can see that this right in here is roughly where you want to see price go. And on the next one, this is roughly where we want to see price go. And on the pullback over here, this right here is roughly where you want to see price go. On the push down right here, that's roughly where you want to see price go. And on this final one over here, from the midpoint right here, right in here is where you would want to see it go. All right. and then after this leg up, right here is where you want to see it go. And after this leg down, right here is where you want to see it go, right? Now, I'm just eyeballing all that stuff for you. But if you were to take this and just draw it all, you'll see that my eyeballing is going to be pretty close, okay? If we do that again over here, the next leg, my eyeballs are pretty close on that one. And then the next leg, oops, grab it again, bring it up to the next leg. See that? Right on top of the yellow. Then switch it around for the leg down. Right on top of the yellow. Then drag it down for the next leg. Oops. Right on top of the yellow. Then drag it down for the next leg. Actually, that one was a little high, but it wasn't a trade anyway because you didn't put it down close. Then drag it up for this leg. It's right in the middle of it. Then drag it down for this leg. It is actually from way over here, and it's right in the middle of it. Do you guys see that? Did you, Jerry? That's great. That is great to hear. That is great to hear. So you found the right person and all that, or does that not really even matter to you too much? I'm sure that matters to you some degree because you got to know who you can trust, right? But I am so sorry to hear that that happened to you. Good. Was it a them, or was it a him or a her, or a singleton? Okay, we'll get into the NQ now. I mean, you don't have to be specific with me. I'm just curious. But you know, curiosity did to the cat. In our house, it makes him fat. Anyway, our first trade here on the NQ, we picked up 75 ticks. Then the next trade here, we picked up 12 to get us to 87. Then we picked up 16 to get us to 103. And then we picked up 44 to get us to 147. That seems like a random place for that. It might have been going down like that at some point. Because we went from 147 to 175. And then went from 175 to 191, then 191 to 239. I believe that is where we ended it. That is where we ended it. There was one more trade here at the end. I don't remember if I didn't add it to the totals. I know that. But again, just eyeballing things. Look at where we are right now. This is the leg length. This is the middle of it. Right, so you want to trade off of this area right here. Now, this right here, I know we're above the YBR, but this is the leg length down. This is the middle of it. So without the YBR, you want to trade off of that area right there. Now, when you're going up, this is the leg length up. This is the middle of it. So you want to trade off of this area right here. Right. What I'm trying to do here is show you guys how to just kind of see it so that you don't need to draw the retracement lines all the time. I know a couple of you guys have asked me if I can automate the retracement lines, and there is kind of a way to get it sort of right, but it's not going to be exactly right every time. And it's pretty important that you get that right. Because, you know, if I say, you know, I want to go back and look at the prior swing low, the way you program it, you have to give it a number of bars to look back at. And if you give it the wrong number of bars, it might call this the prior swing low instead of this. And that's a big difference with a precise entry. Yeah, you probably won't, Jerry. I mean, all those people in that shootout in Hickory, they got out. From what I read about that, one of them started singing like a bird, and he's still. I didn't really follow up too much on that, but anyway. So anyway, that's what I wanted you guys to see, right? Because if you can see it, then you don't need to draw it every time. When you can see it like that with your eyeballs, like in this one, I was going the opposite way, right? I think it was, yeah. It's going the opposite way. So I was off a little bit on that midpoint. That midpoint's right there. With this one, you know, when you're going down like this, see, you can see where it's a good spot to actually be entering a trade. You know, in the past, I've said this before, you know, I didn't really talk too much. Like for the first 10 years, I didn't talk too much about the trades that I was taking and why I was taking the trades. I kind of had the rules that I followed, and I knew everybody knew the rules. And if you caught on, then that was great. And if you didn't, well, you know, then you need to watch a little bit more. Then I think it was 2023 where I really started talking about what I was thinking and what I was doing. And, you know, I went through this yesterday. I think I was talking with Hal yesterday. And, you know, there are so many things that go through a human mind, not just mine, but every human mind. And like a simple process, a simple sequence of thoughts that happens, you know, in my mind anyway. You know, it might take me 5 minutes to explain what I thought about for about 5 seconds. You know, there's like a whole sequence of things, that time frames and everything else that, you know, this happened to me yesterday. I saw a picture on my phone that Jada was looking at on my phone. It was a video on my phone that I sent to my dad. I was going to send it to my dad. This thing that I had made for my dad, this bobblehead thing I had made for my dad for Father's Day. And, when she looked at it, it made me think of a whole sequence of things. It made me think how old my dad was, how old I was when my dad was my age, and how many things I had gone through in life at that point in my life, at that point in his life. And it just had this whole sequence of things, and it made me think of my kids and when they were born, and how, you know, how old I was when they were born compared to how old he was when I was born. And this all happened in 5 seconds. And so what I'm trying to show you here is how you can see this without having to actually draw it, because that's, you know, that's a process. And me saying it out loud to you over time, hopefully you're going to be able to see it, and you'll be able to, you'll understand it, and you won't have to draw it. But like right here, I mean, you know, on a down close right here, you're going to be coming out of the overbought. That's a great trade to take right there. Right, we're on the NQ. You want to sell 12 points from the top of the bar. So on a down close right there, you just want to sell it. Okay, so just get ready for it. Now, I just threw an order on randomly because I don't know exactly, I didn't done the math yet, but it should be 73.50. Right, and I threw my order on at 76. So I'm going to bump it down to 73.50. And here it is. Okay, so I'm ready for the down close. And if we get the down close, this is exactly what I'm looking for in a trade. Okay, and hopefully we're going to get it. It's going to fill me in, and we're going to go down to the prior swing low. That's exactly what you're looking for in a trade. We'll see if it happens, but you know, if I hit the record button right here, do I even have that open? I don't have it open. I can't. I can open it. It might open fast enough since I rebooted. Doesn't look like it. It's almost open. It's almost open. It just hit it. Okay, well, I can't hit the record button now. It's still opening. The opening of it may have slowed things down. Hopefully it didn't snag me up too much. Here, it looks like it's hanging me. All right. So I don't know if my audio is working right now. It might be. Might not be. Okay, my audio has come back. All right, so on that trade, I had it to the point where I would have bought my stop to break even had I not just lost my connection and everything else. So we're still in this, but I would have had my stop at break even on that. We're taking in some profit. Actually, I just lost my connection and everything, so it's just about to stop me out because I lost my connection. But that trade was working out, and when I opened up OBS Studio, that kind of messed me up in this case. So I could make the recording, but you know, I was talking about the thought process and all the things that happen in a single thought process, and I'm trying to minimize the number of things you need to think about. but I'm also trying to verbalize the things that are going through my thought processes as I place the trades. Lots of words. All right, so right now we just stopped out on that, but we had a great entry on that, and we should have had our stop at break even. I know it went enough to get the stop to break even, and I just was unable to do anything about it. So now it's pulled all the way back up here. It's gone through the 100% retracement, and this did not make it into the oversold, so you're not going to have another chance to take a trade right here. It's going to have to get all the way down into the oversold and then pull back up. So it's possible you get another trade in here on the short side before it actually puts in a lower swing. All right. When it does something like that, I like to bunch it up and look at the bigger picture and see if it's actually retracing to a different spot in the bigger picture. You know, like right here, this move down and this move back up is like in the bigger picture scenario. This is a 50% retracement to this move back up. So we should have a move like this right now on the downside, right? That's what we should get right now from where we are, from right there. That's what we should be seeing. Okay, when it pulls back close to the YBR like that, you got to think beyond this smaller time frame that you're looking at. That's how I think of it, right? Because right now, if we get into the oversold, right, if we get a down close on this, we're going to be in the oversold, and we'll have another chance to take a trade on the short side before we actually even put in a lower swing in this time frame. But in a larger time frame, this is one leg length. Right? This whole thing right here is one leg length. So this is the first pullback, and this will be the first entry point in a larger time frame. Let me show you what I mean. We're on a 47, and let's just go to 100. You see what I mean? In 100, here's the leg down, here's the leg up, and it's pretty much what I drew right there. You know, in the other time frame, pretty much what I drew. Here's the leg up, and so this is what you'd expect it to do. A leg down to here on 100. Okay. Do you guys get that? I just jumped through time frames in my mind for you. Going back down all those silly processes I just seem to be going through. Maybe I shouldn't tell you about what I'm thinking. Maybe it'll just confuse you. But anyway, there's a chance here that we're going to need another short trade before it puts in a lower swing. But the next one that we get, right, we're in the oversold, so now it's going to come back up into the overbought. It could give you a trade. You know, the first up close is going to give you right here. The next up close will be up here. So it could give you another trade from right here, possibly. Right, that would be like right here, possibly. Okay, right in there, possibly. And whenever the next one is, it should go down below the prior swing low and should work its way down to this level down here, is what I'm thinking. Right? And I'm focusing on just one market right here, but hey, you know what? We can do that if we want. So here's the first up close. Now it didn't bring it out of the oversold right there. I thought it was going to. So now it's going to have a deeper retracement right here. It might get all the way up to here. It could possibly flip to YBR on us. Because you see, we didn't come out of the oversold on that last up close. I thought we were going to. So now the next up close is only going to bring it here, and the one after that will bring it up into the overbought. So this up close will bring it there. The one after that will bring it into the overbought. So it'll be up here in this area somewhere. Depending how far down the YBR goes, it could end up flipping the YBR. Right. So you guys see that? You see how I'm looking a couple bars out using the information that we know about the indicators. That is almost always 2 bar lengths from the overbought to the oversold. Sometimes it'll be more, but it's never going to be less. Right. So an up close here is going to get us in the middle somewhere, and then the next up close will get us into the overbought, positioning us for another trade. It's not going to be, as far as the retracements go and all that stuff, it's not going to be positioned for a good trade. This just isn't going to work out for another trade. But it brought it out of the overbought on your chart, did it? Let me just refresh my chart then, Michael. Oh, it did bring it out of the overbought. Okay. Well, there you go. Thank you for letting me know that. It brought it out of the overbought on mine too. All right, so now you will get the up close, and the up close will be right here. That's a pretty good spot. for the up close, because this isn't what you're looking at anymore. This is now changed to this right here. So an up close on this could be an aggressive short, actually. You could short it aggressively there on an up close. The up close is going to be right here on the midpoint. And it's got a low right now. The bar has a low here of 90.75, so it'd be 802.75. And it's going to be right here, right up above the midpoint, if it stays the way it is. It looks like it's going to close down right here. That is not a valid trade. And it doesn't look like it affected the bar at all. I mean, that down there. You jump off and jump back and see. Yeah. Not a valid trade yet. But you see what I was talking about this stuff. If you go to the larger time frame, then this bigger move down and up and down, it makes sense. If you crunch it up like this and look at it, imagining it's a bigger time frame, then it all makes sense, right? You can actually go to the larger time frame and see it making sense. I don't know why I grabbed from way up there. I should have been grabbing from here. This should be to here. So this should be actually a little less. Let me draw it again. Okay. The way that it should be is from here down to here, then back up to there. And then this is the leg length right here that should get repeated. This one down to here is the leg length that should get repeated. Right? So that should repeat from right here. So we should see price going down to right here. Now, that's what we should be seeing. Right? And so, yes, I thought Dwayne was going to say something.
Talking about in the question box, or is that something you don't want to talk about?
No, it's something that happened to him personally.
Oh, okay.
Somebody had stolen some stuff.
I'm glad it worked out for you. Sure.
Yeah. Yes, he had an unfortunate personal event happen.
Every day you wake up, it's like you got to put on the whole armor of God and your whole armor of the IT department. Because every email, every text message, every phone call, it seems like is an attempt to scam you out of something. It's just...
Yes.
Oh, and you know, I bought Malware Bytes. When they first came out, I bought the unlimited. I bought the lifetime version.
Did you?
Yeah, they don't even sell that anymore.
Yeah, because I don't have that. I get billed every year.
Yeah, because my wife, she was telling me, hey, we should get this you should get it on our phones or whatever. And my license covered 2 machines, so it's covered 2 machines in my studio. But I never have to pay another dime. And so I thought, well, maybe I can add to my subscription. Wow, it's really expensive.
Is it?
Yeah, I think what they want for a year is I think it's more than what I paid for the lifetime subscription.
Wow. You know, I haven't even looked to see what it costs. I don't know if is it more if you're a new client, because I think it didn't seem like it was much when they renewed me. I don't know. Let me just go and see.
It depends on how many devices you're covering, and now they have this thing called Malware Byte for Teams, but that'll cover up to 10 devices, but it's pretty expensive. And I think the family plan will cover 5 devices.
I have my version is 5.3.0.186 is the one that I have. And
I have no idea what my version is.
If I open it up, it says I have 97% protection. So good is what it says.
I've got 90% too, 97% too. How did you find your version number?
It's down in the little taskbar down at the bottom. If you right click on it.
While you have it open?
No, I opened up. I clicked on the little arrow over there, and it shows all the things that I have running, all the processes I have running.
Yeah. Okay,
And
that's what I did,
then
and I opened it. So you're saying
yep,
just right click it.
if you right click on it, then you
It
can
says
go to
it says on
info.
this that I have malware bytes for Teams. I don't know, but my only options are open malware, check for updates.
Now, up on the top, there's a tab, and it says info. There's actions tab and info tab.
Yeah, mine just it doesn't have that.
I don't know if I can drag that over. No, I can't. I can take a picture of it.
Well, like I say, mine's so old.
Oh, I can't.
I mean, I've had it so long. Let me see my subscription. About
do a delayed
maybe if I
picture.
go to my subscription. Oh, I got to enter my tamper-proof password. I don't want to go through all that. Oh well, it works, so I'm happy.
Yeah, I
just don't
I
see
don't know.
the
I can't.
version number.
I can't do anything with it right now. But anyway, it's 1:31. I got to wrap it up.
All right.
This is what I was kind of hoping for over here. Anyway, guys, we didn't quite get it. We want the pullback to get up into the overbought, so we have another shot at the short trade in here. But well, anyway, that's what we're looking for.
Now you saw how much the ES has recovered today, right?
Yeah, I
Big
did.
sell-off last night.
I did.
Do you think? I know it's just your opinion. Do you think the traders who bought the market today, the institutional traders especially, do you think they'll be willing to carry those positions home over the weekend, considering that there's going to be all these protests tomorrow over the parade, plus there's going to be more war between Iran and Israel? That's going to go on for a while.
Yeah, it's gonna go on for a while. I mean, I think they probably will. It's a buying opportunity. It was a great buying opportunity when it got down to the BBC. And how did the BBC know that? How did the BBC know? It went down.
Isn't that amazing? I was talking about that before you came on.
It's we were talking about that when it was up here yesterday.
Yep.
We were saying, we don't know what it's going to take to get it down there, but
boom, there it was.
Yeah, yep. There it is. Hit it.
And it's on the way down, look how every pullback held on the way down, as on the downtrend.
Yeah, over here. Yep. I want to remind everyone, it's 1:33, so I got to wrap up, but I want to remind everyone the new contract became available this week. We'll be rolling over to the new contract for all the indices next week at some point, probably Wednesday or something like that next week. Thursday's going to be an off day for us next week.
That's just weird to have.
Yeah, I know. Right in the middle of the week.
Holiday, yeah. That's like when Christmas falls in the middle of the week or something.
Yeah, I know. It's awful.
I got a feeling Friday will be a pretty slow session, but you plan to be here, right?
Yeah.
And I probably will be too, because when I tell my wife I want to go somewhere, she'll go, well, and the dogs and this and that. And I'm just like,
yeah, and you can't. When you have a zoo, you can't go.
I'm a prisoner in my own home.
You have a farm. You can't go anywhere.
Goodness.
All right. Let me show everybody how to take the free trial again. Go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for it. Click on that purple button. It's going to bring you to the registration page. This is updated. Fill this page out. It's good for next week now. Gives you your name, your email, your phone number. Down at the bottom, gives you TradingView login ID. Hit the register button. When you do that, we sent everything you need to get into the room in the morning. All right? All right. And with that, we can pass it back up.
And if you do that today, guys, Michael's going to get your indicators set up today, and Valerie's going to send you out an informational email, and in that will be the links to our different Telegram channels that are available to the trial members. And so if you get Telegram installed, it's fast, it's free, it's secure. You'll be able to see the action Sunday night when we start putting out alerts at 6 p.m. Eastern when the market's open. So, and it's really the heartbeat of our community. So, you shouldn't go through your trial without having access to Telegram. Put on your PC, put on your phone, and then even if you don't ever become a member, you're going to like Telegram so much that you're just going to keep using it for your normal everyday life.
I get my sisters on it. No, don't communicate with them more. Get my sisters on it. All right. That is it, guys. With that, I'm going to pass it back up to fabulous Phoenix, Arizona, in studio overlooking South Mountain, America's largest city park. Dwayne, when you are ready.
Yep.
All right.
Okie doke. Recap of the recap of the morning session.
Today it took 4 minutes and one trade to get to $1,000.
Pretty sweet. Good job.
Yes, it worked out.
Alright guys, we're going to pick up where we left off. We had got all the way to the Russell. We did the ES. We did the Dow. So we only covered 2 markets so far. But anyway, look how much the Russell has recovered from the big sell-off last night. So this is where we opened last night. Pretty quickly we dropped to the short target and traded through the short target and just kept falling and falling and falling and falling. And then at the lowest weekly trading zone, is that the lowest one? Or is there one? Might be one more below it. Yep, there's still one more below it. But basically we found support at this zone published Monday morning, this past Monday at 6:15 a.m. Eastern. So support will always send the market looking for resistance, which it found where? Oh my goodness, at a zone. Now we're dropping back to this zone and the BBC. So we just might get another leg to the upside. NQ. Here's where we opened last night. Remember, everybody had these targets. 5 minutes. All of our traders, all of our trial members had these targets 5 minutes before the market opened. Down through the short target, down through that zone, and again, you know, we spiked the zone quite a bit, but we turned around, and then we found resistance at the zone. We spiked it, but resistance, till we finally overcame it. Now look right here. See how the step line? See, on the way up, you had the step line on the left side of blue and climbing, but right here, it has now crossed. The black step line is now on the right side of blue and climbing. So what does that tell us? It tells us that we're most likely to get some support right here, ×2. When price pulls back to the VVC, the pullback holds more often than not, like this, okay? So we expect it to hold until proven otherwise. And when price drops to a zone, see over here, price dropped to the zone yesterday, support, and then when it ran up yesterday, resistance. Now how cool would it be if you don't have these zones? If you had that at the beginning of the week and you knew that once you got them Monday morning at 6:15 a.m. Eastern, they would not change the entire week. Wouldn't that make your trading so much simpler? Now this window we drew live on the broadcast yesterday, it filled during the mayhem last night. Crude oil ran up over $8,000 per contract, and now it's settled down. We probably got about a 50% retracement there, or maybe we got a little. Well, let's just see. This would be the last important low to the last important high. Get up there. Okay. Oh, we overshot the 50 and we hit the 62. Just bounced us up. Then we came back to the 50. Found support. Now we're trying to get back above the BVC. Now, the way this is structured, if you got in at 72.90, you might be jumping the gun, but you should expect potential resistance at 73.20. So how about 72.95 to 73.05? Yeah, that'll work. And that would be enough to give you a goal for the day, if that's the way it goes. Now, if the bottom falls out, you got a big window I already drew in down here. So, remember, you only need 10 ticks to get your goal for the day. So what was I trying to do? 72.95. That's 90. I really wanted 95. Up to 05. Well, I really overshot that. Yeah, it's kind of more like that. But that's enough to get your goal for the day. Okay? And that's just market structure. If price takes out this high, then we expect it to go to this high. It's just how markets work. Now, it may not be intuitive for your brain to think that way. That's why you have us, so you can learn. Okay? And the beauty is once you learn, nobody can ever take it away from you. Unless they give you, I don't know, electric shock treatments or something. Okay, crude, now gold. Oh, gold. Here's where we opened last night. This is the opening candle on gold. We ran right up to the long target. Okay. Now remember, a $1 move in gold is worth $100 per contract traded. This candle opened 34.05 and just to the target at $700 per contract traded. But it kept going and going and going and going. And you see right here on the way up, step line, blue and climbing. But the black step line is on the left side of blue and climbing. Right here where it crossed, that's when you expect price to retrace to the BBC. And the pullback holds more often than not. Now, what happened here is cool, is we overcame red and falling. Pulled back again, red and falling turned to blue and climbing, and that took us all the way up here. Okay? And silver. Silver like a pinball machine, but we have a series of lower highs. Here, 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 and here. This was the open, and we filled the window I drew yesterday, and we filled this window that I drew yesterday. I might have drawn that 2 days ago. I don't know. But it's all recorded at youtube.com/CFRN, so you can always go check it out. Support, 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 support. And again, these zones are behaving as support, which is what we expect, right? When price drops to a zone, we expect support, like over here. This is Friday, here's Thursday, here's Wednesday. Support, support, support. Imagine having that information Monday morning at 6:15 a.m. Eastern. And then they're good for the whole week. Next month will mark 15 and a half years that we've published the zones. Now, for those of you that tuned in late, I'll show you the ES real quick. We had red and falling overhead. When you got red and falling overhead like that, that's when there's a good chance that price is going to trade through the BBC. Just like over here, we had blue and climbing, and we traded through. Okay, so, and then we found resistance all afternoon yesterday. So then we dropped, find support last night. Obviously, we hit the short target. And then we get a bullish cross. This is as we're approaching the Wall Street Open. We run up. The underside of the short target becomes resistance, pushes price back down to the BBC, pull back holds, and you see this bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Now follow the horizontal line to the right on my cursor. You'll see 3 wicks sticking up above that bearish cross, but not one of them closed above it. Now, I always just say expect it to be good resistance at least the first time up, but sometimes it's stronger than that. So we should be coming back here to the BBC. If it holds, we'll get another leg up. If it doesn't hold, well, This is all kind of jaggedy and raggedy. I don't know that I'd want to be a part of that. But if price trades down through the BBC, I certainly would do this. Let's see what we got there. 59.86 down to 59.81. That's 5 points right there. You only need 2 points to get your goal for the day. Now, let's say we pull back to the BBC, the pullback holds, and then we overcome resistance at blue and climbing and the step line, and we take out this high, and we take out this high, and we take out this high. Well, we certainly have a window for that. That's, what do we, oh no, no. Gotta tighten that up. Gotta get well above that high. So, I'm thinking 60.32 to 60.36. It's 4 points. Okay. The Dow. Oh, the Dow's filling that window we drew earlier. Okay. I said by Monday, I'm sure one of the two will be filled, and it looks like we're going to fill this one right now. So, Russell. And then we've covered them all. No need to drag it out. I know everybody wants to get busy with their weekend. One last look at the daily chart. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Pull back held, pull back held, pull back held. But we know eventually it'll trade through. See, it traded through on February 21st. It gave us this nice downtrend. But all the pullbacks held. Until we traded through on April 24th. And then this pullback held, and this pullback held, and this pullback held. Now, last night in the workshop, all we had was just a little bitty red candle up here. And then the news broke, and this thing, it hadn't got all the way to the BBC, but it kind of looked like that's where it was headed. So we had a huge red candle all the way down. But then cooler heads prevailed, and the market has run back up. This much, it's maybe easier to see. This was the open last night. Boom, we dropped to here. Now we're already back to here. So I'll draw reverse fibs on that because that was a downtrend. We way overshot the 62, and it was the bearish cross that stopped the market in its tracks. Now, I know you're dying to know, how could I become a member of this thing? Well, you'd go to mytradingiq.com. You'd watch the videos, you'd read the content, and then you would send us an email to support@cfrn.net. That's the Christian Financial Radio Network since 2005, but all you got to remember is support@cfrn.net. And just say, I want to become a member. Valerie will send you an info pack that explains everything it means to become a passport holder, and she'll include a link that you can click to seal the deal. If you're a veteran, let us know, and we'll provide you with a veteran discount. Okay? Now, here's what you're going to get. 2 hours of live training every trading day in an interactive environment. Michael's putting on, taking off trades, explaining every move he makes, every trade he takes, and the reason why, while you trade along in your demo account to qualify to go live and ask every question that pops into your head. Because it's a rules-based methodology, pretty soon you'll run out of questions. Or you'll find yourself asking the same question again and you'll get the same answer. Okay? 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. I know you can buy books, you can buy videos, you can buy courses, you can hang out with grumpy gurus, or you can actually find a teacher who takes an actual interest in you as a human being, as someone who wants to succeed as a trader. And you know what you don't hear in our discussion group? You don't hear people talking about how they're going to buy a Lambo or, some bigger, faster car or bigger house. Or not that there's anything wrong with those things. But the group of people that we've assembled over the years are people who really do put God and others first. Now, we're not saying you got to give away all your money or anything like that, but you should be generous. God blesses you so you can be a blessing to other people. But he also doesn't want you pulling up to church on Sunday with your bumper falling off. He doesn't want you sending your kids to school with holes in their shoes. Holes in their pants, I mean, that's cool now, somehow. But you get my point, right? Whatever you have in this life doesn't belong to you. It belongs to God. All good gifts come from the Father. Now, what he wants you to do is be a good steward of what he provides you with. And if you can prove that you'll be a good steward with little, then he'll make you ruler over much. It's a true story. I read it in a book. The book. Along with 2 hours of live training every trading day, you're going to get private one-on-one mentoring as you need it. The methodology you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's been in place since the inception of the markets. It will remain in place till the markets cease to exist. Why? Because that's how markets work. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. And every Thursday afternoon, you get an invitation to attend the members-only workshop Thursday night at 8 p.m. Eastern. And if that weren't enough, you will get the golden key that opens all the private channels in Telegram. We have public channels and private channels. Now, here's something, if you're still at the stage of like taking our trial, okay? Another reason why it's so important that you get in Telegram installed on your computer is so that you can chat with our traders. People just like you who spent years blowing up accounts, spending tens of thousands of dollars on all these different things, right? But they can never become consistently profitable. We got a ton of people that are consistently profitable. And when you're on the trial, you can chat with them. We have a discussion group. You can ask them questions. What was it like for you? How long did it take you? Whatever's on your mind. Okay? Now, very few places let you mix and mingle with their clients or students or traders, whatever they call them, because they're afraid you'll hear some horror story. We don't have any horror stories. If any of our members or traders have a problem, then they come to us and tell us what the problem is, and then we work with them through private mentoring and all the other things and help them get on the right track. If you really want to do this, you can. We're going to provide you with the information. We're going to give you all the tools, but what you do with the information and the tools, We have no control over that. If you don't follow the rules, that's not our fault. If you can't develop the patience and self-discipline to wait for the proper trade setup as it was taught to you, that's not our fault. If you follow the rules, do everything as you're taught, and you're still not getting consistent results, then we're going to get in a one-on-one session with you and figure out what the heck's going on. Because we have all these traders doing exactly the same thing. And you say you're doing exactly the same thing, but you're not getting the results they're getting. There's got to be a reason. You missed something somewhere, or there's just something wrong. I don't know. But the good news is we'll help you figure it out. Remember, we've been around since 2005. So the Telegram channels really are the heartbeat of our community. It's where you get your weekly trading zones, your Logic 247 alerts, your concierge trade alerts. It's where we chat with each other, show our charts with each other, show trade setups to each other. Hey man, look what's setting up here. And Stefan, he's one of the best at this. He'll go, hey, look at this chart. And to what degree I have the time. I've been doing this for a really long time, and so I really appreciate Stefan because he's got that fresh energy. I'm a man of a certain age. I'm kind of getting a little tired, you know. I'm not going to stop or anything, but he's a real go-getter, and we really appreciate him. To whom much is given, much is required. Remember that, okay? Now, if you step up and send the email to support@cfrn.net today and say, I want to become a member, you can be getting those alerts Sunday night at 6 p.m. Eastern when the markets open, and you'll have access to everything we have. It really is a good deal. I checked. Everything a trader needs, all under one roof, one low price. True that. Okay, good word for the day, and then it's time for the weekend, man. Who are you depending on? John 15:5 says, for without me you can do nothing. That's Jesus speaking. Because God's Spirit lives within you doesn't guarantee His power is at work in your life. God's power is available, but you must plug into it. Jesus associates our spiritual life with a vine and its branches. I am the vine. You are the branches. He who abides in me, and I in him, bears much fruit. For without me you can do nothing. Nada. In this comparison, the branch is completely dependent on the main vine. It cannot yield fruit on its own. Growing fruit is an internal job. If someone tied apples onto the branches of a dead tree and said, look at this fruit tree, what would you say? You'd probably say, you tied those things on. That's similar to when a Christian says, I'm going to tie a bunch of fruit in my life. A little patience now, a little goodness later, a little self-control at another time. I'll just do it by myself. Impossible. It's the fruit of the Spirit, not the effort of the flesh. Jesus said, he who abides in me and I in him will bear much fruit. Good fruit. How can you tell you're abiding or residing in Christ? Well, consider your prayer life. And I know some of you are going, I pray every time I go to church. Really? Paul said pray without ceasing. Now, it doesn't mean you have to be moving your lips, right? Because that'd be a little odd. I pray everywhere I go. It's just part of who I am. If I'm in the checkout line at the grocery store and somebody's standing in front of me, the Holy Spirit will speak to me. This person's going through a struggle. Now, I may not know what that struggle is. I don't know if they're sick. I don't know if their spouse is sick. I don't know if they got financial problems. But I'll just start praying for that person without moving my lips. And what's so funny is often that person will turn around and look at me with the oddest look on their face. And I just smile and say, "How you doing? God bless." And they just turn back around like that was kind of spooky. But anyway, if the only time you pray is when you go to church on Sunday, you need to step up your game. We every day in our devotional we talk about, spending time with God. And our good word for the day for the last 3 days was getting alone time with God. Away from people, away from things, away from phones and texts and all that stuff. So, anyway, your prayers reveal your dependence on God. What do you pray about? Whatever you pray about is what you're relying on God for. The Bible says in 1 Thessalonians 5:17, never stop praying. Or pray without ceasing. It's a different translation. Pray about your decisions, your needs, your temptations, your interests, your plans, your schedule, your problems, your purchases. Specifically pray about everything. Doing this is what it means to abide. Being aware that God is always with you. Practicing His presence. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.